What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session, and we are, for a change, going to be looking at pound USD. I've just closed out on 2.5 our trade. This is a live execution I've recorded, and I will go through the reasons why I'm looking at the pound this morning and break down this entry. Let's jump into the analysis now. So first up, let me explain why I was more interested in pound than I was in euro. It comes down to the fact that on the euro we have a French bank holiday and an Italian bank holiday. I'm not sure how much impact that's going to have, but we couple that with later on today, we've got some non-farm payroll news in the US. We've also got ISM and JOLTS. We've got FOMC speaking, so generally a really bad day for news. And these bank holidays appear to have really affected the volume in the market on euro. Whenever I see gappy markets like this, so price action, very small candles, gaps all over the place coming into it. So we've just got these volume imbalances where price is just erratically jumping and skipping sections. It really puts me off taking trades. We can get random wicks, so these large candles appear out of nowhere, gaps again. It's not nice. This whole range, from where we put like an 11 pip, 12 pip range from the high to the low, so very small move. If we compare that to what we're seeing on the pound's price action is a lot smoother, so we don't have as many gaps. Yes, we have one gap here, but it generally looks a lot nicer. And also our range that we were playing with from the low to the high is a 30 pip range, so I've got lots more room to maneuver inside this larger range than in this range. So yeah, I wasn't really interested in the euro due to the fact that we have the bank holidays, and then looking at the price action, it looked really ugly to me. Not the kind of price action I want to get involved in with such small erratic candles. So let's jump onto the analysis now for the pound. So here we are, as always, on our 15-minute time frame, looking at the pound USD chart using our usual indicators. So we've got the session liquidity tracker. This is showing us our untapped levels of session liquidity with these extended green lines. When liquidity is swept, then the lines will get turned red. As we can see at this point here, we've just swept Asia and New York PM session low. Links to all of the indicators that I use are down in the description below, along with a quick video showing all of my various settings if you want to try and replicate my charts. So you can head on down there and find more details if you'd like to. So yesterday in the London session we had a strong move up, put in the high, and then we've had a strong pullback. This is likely the high of the week. I believe there's an 80% chance that the high's put in between Monday and Tuesday of the week, and then we'll come back and attack the rest of the range, which means we do have Monday's low as a potential target down here. This pullback has led to a consolidation through the New York PM session and the Asia session at the moment. We're going to monitor our 15-minute fair value gaps that we've got here. The one that I'm most interested in is this one. This is kind of in the middle of the range. We do have a very small fair value gap here. I'm not going to pay much attention to that since we've got a much larger one just above it. And then obviously we do have this unfilled fair value gap. It's been tested a couple of times above the Asia high. You can see taking this, if we tick Asia high and the PM session, we would be filling that fair value gap, and then we have a much larger fair value gap above us. Nice reference point will be where optimal trade entry is on this leg down. So we'll pull a fib from the high down to the low. We're going to keep an eye on our optimal trade entry, which just happens to be inside this fair value gap. So that's quite a nice confluence there. If we are following ICT's teachings, we are really going to be looking for selling in a premium. So anything above 50%, so into the optimal trade. And buys are more on the cards if we are in a discount, which we are currently sitting in a discount. We can see from yesterday's New York AM session, we have got relative equal lows here on the 15-minute chart as well. So that's a good draw on liquidity for mark that down the sell side. And this sell side is actually, look at this. We take this further back, we've got relative equal lows right across here, through to here, into a balanced price range. So this is actually quite a significant draw on liquidity, and it kind of supports the thesis that the high of the week, what we're doing, balanced price range. This kind of supports the thesis that the high of the week may have been put in, and then we can draw lower into here. Now we've just swept Asia high, so potentially we can get a pullback, optimal trade entry to then look for shorts down here if we do have a bearish bias. This sweep of liquidity over the Asia and the New York PM session range has happened before our trading window, so we're going to be monitoring price from 2 AM. This is when the London window is going to start for us. So there may be an entry already here that's triggered before 2 AM, so we'll just have to monitor this and just see what it looks like. So let's jump into the price action now and see how this plays out for us. I'm going to start straight onto the 1 minute time frame because we have just had a sweep of liquidity taking the New York and Asia lows here. We know our entry model is going to be the breaker block with fair value gap entry model, so the unicorn model. We will be looking to see where that breaker block would be for a potential entry coming into 2 AM if we're going to take a long position. We can see we put in a high here, we've stuck a low in, put in another high, come down to a low. We've got these highs here, but these are relative equal highs, so that's the actual low there. So I wouldn't class these as a swing high. The relative equal highs, if we check the prices here, we can see the high and the low of the candles here. The high of this bullish candle is 21330. The high of this bearish candle is 21330, so they're exactly the same. So that for me isn't a swing high, this is the last swing high. So as this is the last swing high that led to the latest low, that would be our breaker block there. So the last bullish candle before a swing high leading to a liquidity sweep is our breaker block. We don't have a fair value gap inside that. We do have a fair value gap just above it. So potentially, if you were very, very aggressive coming into the new hour, you could look for an entry there. This is not what I was looking for at this point. I was just analysing if I preferred euro or the pound. The euro wasn't looking particularly great, so I was just making a decision here. We'll see as we go into the session. This doesn't get tapped, so price just runs away. So there was no entry for our unicorn model at the very open of the London session. In fact, we'll leave that breaker on just for reference. We are now into that 15-minute fair value gap that we highlighted. So this is the 15-minute FVG, premium and discount of the FVG. So we want to see if 50% of this holds. If it does hold, it means it's a strong fair value gap. Potentially price is going to come lower. If it fails, then it could act as support to take us for higher prices towards our premium level where we can look for sells. It's offering a little bit of resistance at the moment. And now we've cleared through. So one thing I like to monitor at this point is, will this flip from a fair value gap to an inversion fair value gap? So, as it acted as resistance here, will it now act as support? So let's see if we can come and retest this. We'll pull away, we're back to the top of the fair value gap. 226, so we're coming into the new half hour candle, so 230. Is this acting as support? There's our 228, 29, 230 acting as support, so we can see that. So we're coming into a new half hour candle. We see we've flipped this from resistance to support, so that's nice confluence. Hopefully we can lead to higher prices now, and primarily looking at filling some of these inefficiencies above, getting ourselves into a premium to look for a sell. So I'm not rushing in trying to chase trades long here. We've obviously gapped up. strong aggressive move at the open of the 230 candle. Cleared straight through this, so there was a temptation to look at this swing high here and see if maybe we were going to get a reversal off that swing high as we were sweeping that liquidity. This monster move at 3 AM into the silver bullet hour, driving for the Asia high, kind of put pays to any short positions that we've got there. And we'll analyse this price action actually just to clarify why this wasn't an entry. We can see coming up to sweeping that level of liquidity, we came up, we put in a high, we put in a low, so this is a new swing low. We came up, put in a swing high here, and then we've broken that low. So we've got our break of structure. This is our pattern: high, low, higher high, lower low. So we've broken structure there. We're looking for the last down closed candle that leads to the break of structure, which would be this candle here. So this would have been a breaker block. You can see this was respected. So price did come, it did tap this. We're coming into a new 15-minute candle. It did tap this, so there's potential that you could have gone into this. However, what's the key thing that's missing in this area is tight consolidated price action. So there's not a big drive away, and there's no fair value gap inside the breaker block as well. And we were very, very close to the Asia high, in all fairness. So there wasn't a lot of room, big inefficiency to fill up here. So that's why I wasn't interested in taking this. Being cautious, obviously we know that we've got a news-driven day today, so wasn't looking to take a trade off that. Potentially a breaker block setup, but no fair value gap inside the breaker block, so it wasn't the unicorn entry that we've been using so profitably over the last few weeks. So now we've taken the Asia high. We obviously have the New York PM session high above us, driving very aggressively towards that in the silver bullet hour. Taken the New York PM session high. So we've got our premium level just above us here. So let's just again monitor this so we know where we're at. We have our low, high, slightly higher high. So for us to break structure, we need to take out this low. So price needs to come down here, leaving this as our breaker block. Come up now. We've taken a new high, so we've got no breaker block set up there. So hopefully we can reach now up into a premium. Price does pump nice and aggressively into that premium area, so we're at 320. So potentially look for something at 330. 345 or 4. So again, I'm trying to time my entries with the open of 15-minute candles. This fair value gap potentially acts as an inversion fair value gap now again. So where are we at? We've had our 330, we're just into a consolidation now. Coming in 340, 340, so here we go. So we're getting our break of structure. So again, let's look for our pattern. Put in a low, put in a high. This is a new swing low. This is a higher high. This is kind of nothing because it's all inside this range. So we're looking for a break of this low, which we have just done here. So this is our break of structure at this point. Looking for the last up closed candles that create the swing high, which is this here. So this is potentially a breaker block. Well, it's not potentially, this is a breaker block. We're looking for an inefficiency inside the breaker block, which we've got there. I'm just going to remove this fair value gap so we can see this cleaner. So we've got our breaker block. It's a very large breaker block in comparison to a lot of the price action around it. Time wise, we're coming 340, 345. So as a modification to this pattern, something that I've seen recently from Kami Capital, I believe, has started scalping with this pattern, is looking at this. So we put in a high, we then break the high. He's expecting a retest of 50% of that price leg. So this is on top of the breaker block. You know that this pattern, we're looking for a breaker block in here, which is what we've got. So our breaker block is right down here. However, because this is such a large breaker block and we've got a lot of inefficiencies above us, I mean, the stop loss would be fairly high if we were to take an entry here. We kind of got an 8 or a 9 pip stop loss, which is much larger than I usually like. I like to have around 4 to 5 pips as a max. So the analysis that Kami Capital has come up with is the fact that he would expect a retracement to 50% of this leg. So we would expect, this is the kind of up closed leg before the break of structure. So we would expect a retest to around 50% of this level before we get the leg down. Now, for this trade, I pulled my fib from the low to the high. So we do have our unicorn model, but I'm trying to refine this to give myself a better risk to reward. So again, we're looking at premium and discount of this bullish price leg. We want to be selling in this area. So we do have this fair value gap just below this bullish order block. It will mean wicking through the breaker block, but it would give me a much better risk to reward. So I was looking at taking my short position from that there, leaving the stop loss just a couple of points above the high. So I've got my stop loss down to a 4.6, which is much better in my opinion. And then what I'm targeting, when I saw this, is I'm targeting this volume imbalance that we left here above our inversion fair value gap. Expecting price to come down and tap that volume imbalance. So we're monitoring price action, we're seeing what we've got, and I'm hoping in here we've got a break, we've got a order block. We've got an inversion fair value gap, and we've got a normal bearish fair value gap in reference to resistance. So we've got our 3 levels of PD arrays. We've also got the breaker block here. So this was my thesis. Slight modification on the unicorn entry because I'm just looking to get a refined risk to reward. This would give me 3.3, taking out this volume imbalance here. We're looking to get an entry around the open of a 15-minute candle. So we are now currently at 341. So we're coming 342, 343, 45, sorry. So we're in 45, we're still respecting the bottom of this breaker block. So there's a potential entry there. In all fairness, we could have been triggered in at that point. Wasn't what I wanted a better risk to reward. You can see price does pull away initially. Coming into the 4 AM candle, let me just refine this. So we haven't had an explosive move away from the breaker block. We're kind of consolidating underneath it. So I'm watching for 4 AM now. And you'll see we get a really nice drive into our level at 4 AM. So this is the open of the new hourly candle, the new 15-minute candle. We've engineered some liquidity in this area. We sweep up into the 50% retracement of this leg here, and then we are targeting the low just down here. Now I recorded this live, so this was an execution that I did take, so we will jump to the live analysis now, and I'll walk you through the live price action as we drive down to take profit. So this is a scalp short. We're coming into 8 AM and we've swept Asia high, we've swept New York PM session high. Break of structure, we've got a breaker block at this point. I've gone from an entry at the 50% of this retracement. So this is based on what Kami Capital has been doing. So we've swept some swings. We've broken entry on the 50% retracement into this fair value gap. TP1 is going to be at 1-to-1. And then TP2 is going to be at this volume imbalance here. Okay, beautiful. We didn't get stopped out. We got very close to being stopped out, but we didn't get stopped out, so that's nice. I'm happy with that. So obviously we had a big retrace, very close to being stopped out. Stop loss was a couple of points above this high, so spread didn't take us out. We are now coming away, so the analysis was correct. That was horrendous. We are approaching take profit now. So this is the close of the trade. There we go. Take profit hit on that one. So not the cleanest of trades. This pullback very, very close to stopping us out. I'm glad I walked away from the computer at this point. I wasn't here to see this because I would have probably closed out. So I didn't have to worry about that. Came back as we were taking take profit 1, and then this is take profit 2 now, just over 2.5R. Closed out. This may run, take out the daily low, but I'm happy with the 2.5, get out of the trade and go and enjoy the rest of my day. So there was the trade. As I'm just finalizing the edit now, I'm just seeing where price is before we render this one out, and we can see really nice price action and delivery back to that 1 minute breaker right at the very start, and that was hit at exactly 5:32. So you can see the power of the 15-minute candle opens here. We hit that 1 minute breaker. We've had some consolidation now. Ultimately, it looks like we're going lower, taking out the daily low that we've highlighted, and potentially running for this balanced price range. We don't really know, as I say. I'm just happy to close out of that trade just to secure my profits because it's such a news-driven day today. I like to be done and dusted, not the cleanest of price actions. Let's see where we're at now. So we are driving lower, heading towards, so we've taken out the daily low and we are heading towards our balanced price range where potentially we could hit that in sync with a news release for a reversal trade. And so I hope that analysis was useful for you. I hope you understand why I chose the pound as opposed to the euro. I hope my explanation of the refined entry made sense. And ultimately, I'm kind of regretting not leaving runners. Something maybe I need to work on is just having the patience to leave runners. Take 80-90% of the trade off and leave some runners there. I could potentially do that better. But anyway, overall, a positive day. If the video is useful, please leave it a thumbs up. If you have any questions or comments, please leave them down in the comments section below. It'd be great to get your feedback. And likewise, if you're enjoying this kind of content, want to see more daily analysis like this, then consider subscribing. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.